Welcome back to the Future Finance Group podcast, Down to Finance Australia. My name is Amy Tennant and I am the Director and Mortgage Broker. Today we are joined by Mandy and Sarah. Thanks, guys, for having
us. Thanks for having us. Yeah.
Today, we're going to be tackling a topic for business owners, which are known as self-employed clients. What lenders actually need to see to approve your home loan. If you run your own business, you might be wondering, do I need 2 years of tax returns? What if I've only just started? Are there other ways to provide income documents? So today we're going to break it down to let you know exactly what you need in terms of applying for a home loan.
I guess for self-employed clients, the bank assess your income just slightly differently, I guess, because it's not as simple as just a payslip. So it's not all just on one document. Mm-hmm. There's obviously multiple documents that we would require to send to the bank. But yeah, I guess
and obviously these days we all know how complicated a payslip can be. It's not as simple as just having a gross income with an hourly rate anymore. There's multiple different things on payslips, such as, Mandy mentioned
police officers,
people in emergency services,
nurses, allowances and deductions.
Anybody that's working overtime, anyone that's working, after the standard 9 till 5.
Exactly. Weekend work, etc.
Yeah, you've got deductions, salary packaging. There's so much that can actually go onto a payslip.
I think as self-employed clients, probably easier in some ways.
100%.
So yeah, I guess for you self-employed people out there, don't be scared or, to pick up the phone, because I guess there's multiple ways to demonstrate to the bank your income.
Yeah, 100%. We love self-employed clients. So if you are listening to this podcast and you're nervous and you've obviously heard, I guess, would you call it like the stereotype saying that banks don't like self-employed clients, that's 100% a myth. It's not true. Obviously, like all industries, there's always going to be a target market for each lender, whether they are comfortable with self-employed or not. It's like, what's an example of another industry where it's like, if you go into this shop, this is their target market client. If you're going into this shop, this is a target market client. So obviously, given that we're mortgage brokers, we deal in the space of working with 40 different lenders. They all have their own policy and document
niches that they like to focus on.
Checklist.
Yeah.
So we might go through and just obviously just highlight that lenders want to understand the true sustainability profit of your business, not just the turnover. So that means
that's a good one to point out, actually, because that really is looking at the total sales of the business minus the expenses of the business, and that's where you get your net profit there. So the clients, that's what the lenders actually look at when looking at the sustainability of the business on the long-term perspective.
Yeah, and each business is going to have like its seasonal periods. Like, if you're a pool company out there that's doing pool cleaning, obviously your period in, potentially November to, April is going to be like really, really high. And then obviously in the colder weather down here in Melbourne, you might be on more of a like monthly, payment arrangement with your clients. So obviously you're going to have 6 months of really strong financials and then potentially 6 months of, a little bit less of turnover. So
that's why a 12-month fee is really good. Yeah.
And I think that makes it easier for the banks to sort of see the growth or the trajectory of your business, when we're using 1 or 2 years worth of financials as well. So
and that's the benefit, I guess, of like picking up the phone and talking to us is during our appointments with you as the client, we're really able to understand those seasonal periods. You can give us a full understanding of the story behind your business and so forth. But I might just touch on with Sarah and Mandy what the 4 most common document checklists are. And And obviously, these are just the four most common. There is obviously multiple different variations out there for self-employed clients. And, you know, we always say we don't ever leave any stone unturned. So if you do have really unique circumstances, then we're up for the challenge, by the way.
Yeah, absolutely.
So going back to full doc.
Full doc. We've got 2 years worth of financials, so that's obviously where we're supplying both years to the bank. There's other options and lenders out there that will use just 1 year in isolation, which is always a nice one as well, especially if you're still in the process of drafting that current year's financials. I guess the good thing with working with us is, you know, we can reach out to your accountant and have meetings with them to make sure that we're putting all the pieces together.
It's a collaboration.
Absolutely, yeah. You know, same with your bookkeeper and things like that. Then you've got business tax returns. You've got your notice of assessments. That's always a good one, where that just obviously demonstrates your personal tax return or income.
So your type of clients that would probably apply for like full doc loans are clients that have been in business for a while. I would probably say like 4+ years. You know, the first 2 years of trading any business generally might not have a massive profit because you've got lots of expenses starting up. But then by the time you get to the 3rd and 4th year, you know, you really pass that, you know, hurdle of obviously outlaying a lot of money. So, you know, your full doc loans can definitely be, you know, 2 years of absolutely everything. We want to know your ins and outs and the color of your undies, basically. The alternative options that we have, Mandy, are
alt doc loans.
Yes.
Yeah. Alt doc loans are really good for, like you mentioned, businesses that might just be starting out or ones that haven't got up-to-date tax returns. So maybe the tax return might be a couple of years old and we might want to look at using, say, like BAS statements or something along those lines to project what the income is for that company for that year.
And BAS statements are obviously the 3 months that you prepare your total turnover for. Sometimes we work with the bookkeepers in order to be able to provide us with, you know, 2 BASs. Some lenders require 4 BASs, but obviously the policy normally is that we'll use 60% of the total sales in those BASs.
If we have 2 BASs, we can then annualize it as well.
Yeah,
rather than using all of them.
So the other option is
we've got like your business bank statements that we can provide to the lender. You've also got your accountant's declarations or accountant letters. And again, that's something that we would then discuss with the accountant if that's an option.
That's become a little bit
harder though.
More challenging, the accountant's declaration, because obviously in the accounting industry, they've had lots of licensing changes and insurance and things like that. So we won't lie, sometimes we do hit a little bit of a hurdle asking for an accountant's declaration. And again, each lender that does work in that alternative document, you know, policy are going to have different letters. They all read different ways. So obviously we always try and do the path of least resistance to be able to obviously secure you the finance for, you know, from you to be able to move from A to B.
Yeah, correct. Yeah.
So just to highlight, we've got full doc loans, we've got alternative low doc options, we've got the 1 year of financials, which obviously Sarah spoke about a little bit.
Yeah.
But what would be the ideal client with 1 year financials? Somebody that you're probably meeting like right now, to be completely honest. Like
correct. It probably comes down to timing of the year. So like at the moment I'm working with a few clients being, you know, it's October now, but, you know, they're starting to get their 2025 tax returns completed. So, that can be something where maybe last year's tax returns might have...
That's the 2024 tax returns.
Yeah, that might have, you know, a loss or something like that because you've had expenses you know, that have exceeded your net profit. So then we might work with the accountant to ensure that there's enough income for the new financial year or the latest tax return that you're about to complete.
So
and they'll
probably
use
one
that
of the biggest mistakes that we would see is meeting a client now who ultimately
already
wants
gone
to
and lodged.
purchase and doesn't have any communication with us and just like jumps the gun and goes and lodges their 2025s. And prior to speaking to us, they might have had a lodged tax return with income that might have only been, 15 grand less than what we needed it to be. So I think the most important thing is having that really good conversation with us first.
Absolutely.
Finding out what your goals and objectives are and then working backwards and then being able to see, potentially what options are with your bookkeeper and your accountant. So if you are listening and you're thinking about buying or refinancing as a self-employed client, then I would definitely not jump the gun. Have the conversation with us first. And then we can obviously give you so many different options, repayments around different loan sizes. I mean, I guess one of the most disheartening things that we have to do is relay borrowing capacity to a self-employed client, that might only have been 15 grand of taxable income short from buying what they need to what they have. And then ultimately they have to wait a whole nother 12 months if they're going to, go down the path of 1 year of financials. Obviously, if you're looking at an alternative document loan, it might be 6 months, but still that's a really long time to put all of your family circumstances on hold. So I think for maybe a 45-minute conversation with us to really determine what that figure is most important.
Definitely.
And I think the other thing that we just want to touch on with self-employed clients is just making sure that, your ABN has been registered for at least 18 months.
Yeah.
We do have lenders that will consider it a little bit less. But ultimately, if you have an ABN that's over 18 months, that's a really strong green tick in your box. And then obviously just GST registration. So if you're a sole trader and you're not registered for GST, but you're declaring a higher income because you want to borrow for a little bit more, then I would definitely start speaking to your accountant about becoming GST registered and seeing if that's something that would be suitable for you. And then obviously there's different variations like partnerships and trusts and everything like that. So obviously just a couple of quick tips for self-employed clients to get approved faster.
Yes. I guess we want to minimize personal expenses in, your tax returns because we want to try and increase, I guess, the profit so that we can have the taxable income that you need.
Yep. Planning ahead, like we mentioned before, make sure that you're planning ahead 6-12 months in advance so that way you can at least make sure that you're declaring the right amount of income, you're declaring the right amount of expenses, instant asset write-offs and those sorts of things can affect all of that. So
and really just don't be embarrassed about your circumstances. Like I think that's really important. Obviously, everybody's gone through, 4 years of a bit of a challenging period, like post-COVID, post the interest rate highs. So some clients do have some tax debt, which obviously having zero tax debt is the preferred option with lenders. But again, like I would still suggest to have that planning in place with us, your bookkeeper and your accountant, and definitely trying to...
all about communication, I guess, and opening.
Yes.
Making sure that that's
flowing. Don't push your ATO debt under the rug.
And having like a really clean business like structure, bank accounts, like not living out of your bank, your business bank transaction account. That's probably one that I always give tips to my clients for.
Especially your young self-employed
you want to have that separate, everyday account where you might be moving money to live out of your everyday account and then keeping your business account just for business purposes and transactions and things like that.
Yeah, 100%.
Yeah.
Yeah. Bank account structure is extremely important, I think.
Yeah.
We've gone of the day of living out of just one account.
You need to have
every lender can offer multiple accounts for multiple different purposes and things like that. And
Absolutely.
if you're unsure about how to set it up, again, that's something that we can definitely help with. I think also, again, like referring back to what Mandy said about planning, but definitely trying to get all of your financial advisors on one page.
Yeah, so, collaborative. That was a good word that you said before.
That's setting up, a joint Zoom whereby the clients come in, we've got the bookkeeper, the accountant, and us all having a really open and honest conversation about what your goals and objectives are, and then putting a plan in place to like really make sure that can happen.
Yeah, definitely.
So I think obviously moving on, like we just want to highlight that being self-employed shouldn't stop you from achieving your property goals. So whether that's investing, refinancing, paying out tax debt, selling and buying for the bigger family home, at Future Finance Group, we obviously offer a range of, different products through different lenders. So if you're thinking about it, obviously reach out to one of us, and we'd be more than happy to help you.
Yeah, definitely. I guess just trying to delete that myth or story that you can't get finance when you're self-employed. I think, that's probably one thing that we want to drum home is that, you definitely can. Finance. It's not harder. No. Like we said at the start, it's probably a preference sometimes, working with some self-employed people. So,
and it's all about timing. Timing is really important. So obviously leading up to when end of financial year comes, June 30, and then post obviously, July and onwards, trying to make sure that we have those conversations as early on as possible before those like deadlines are locked in and we can't change anything. Thank you so much for listening today. We look forward to speaking to all the self-employed clients. And obviously, again, if you have any questions or queries, please feel free to reach out. But we look forward to speaking again on the next episode. Thank you. Just remember to keep in mind, these podcasts are just general advice. And if you are after something more customized, reach out to your financial advisor, or you can reach out to us and we'd be more than happy to help.